In this video, we will talk about Indie Semiconductor, where the company stands, if you should buy its shares, and what are my price predictions. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel. Indie Semiconductor is a company that sells devices and chips for autonomous vehicles. It has billions of dollars in deals and established partnership with other auto part manufacturers. The company is well positioned within the sector of autonomous cars because it manufactures key devices and components that are required for the vehicle. Many prominent manufacturers such as Tesla, General Motors, and Nissan are actively developing their autonomous driving platforms. It is a real possibility that the trend will become massively adopted in the upcoming decade. For 2020, it has booked $23 million in revenue, and it projects that by 2025, it will have more than $500 million in revenue. This growth is based on the potentials of the autonomous driving market in the years to come. When we look at the 1-hour chart, we can see that the company has surged in price back in late November 2020. The stock surged from $10.50 to $15 before correcting back to $12.50. Currently, the share is trying to make a comeback since the stock has reached back to $13.42. The stock should have a fairly choppy few weeks, especially since it's such a new company to be traded via the special acquisition company Thbr. The current support and resistance levels are not very reliable, if they can even be called as such. We have seen the merger of many companies with a SPAC over 2020, and every time there is an initial frenzy that pushes the stock to a high price level before the price corrects lower or takes off to further highs. If we look at the company as is, the current peak of the stock price is not so far away from where it began, and the current price correction may simply be caused by profit-taking of investors, which seems to have already ended. My suggestion is to buy the stock, but leave enough room to buy more shares at a later date, if the stock goes through another correction over the next few weeks. Since the company is still very new, there are not that many tangible indications to base the decision on. The current price level is, in my opinion, the most appealing reason why I believe that the stock has a lot of potentials in the future and why now is a good entry point. At $13, it is very close to the $10 a blank check SPAC would be traded at. This is why I believe that it is worth the while to start building a position now. Regarding the price fluctuation risk, it can be mitigated by limiting our exposure and managing the timing of each purchase. I suggest that the position is built gradually over the next 4 to 8 weeks when the price action shows support during price correction phases. The main catalysts to send the price higher are the quarterly reports of the company, since it is expecting 2021 to be the year when it will balance the expense and revenue and generate a net profit. Because this stock is a new company to be traded on Nasdaq, I recommend that the exposure is limited to 1%. If the company manages to generate a net profit in 2021, the exposure can be increased to 3%. I believe that this company can easily double or triple in the 2 to 3 years to come, if not much more, given the development of the autonomous driving. Thank you very much for watching. If you like my content, please like, comment, and subscribe to my channel.